Ladies and gentlemen, good day and welcome to the Jyoti CNC Automation Limited Q2FY25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar. Thank you, and over to you, sir.
Thank you, Neha. Good evening, everyone. On behalf of ICICI Securities, I welcome you all to Jyoti CNC Q2FY25 earnings call. Today, we have with us Mr. Prakram G. Jadeja, Managing Director of Jyoti CNC. Without much further delay, I will now hand over the call to Jadeja sir for his opening remarks, which will be followed by Q&A. Over to you, sir.
Thank you, Mohit. Good evening, friends. I'm delighted to extend a warm welcome to each one of you to the earnings call of Jyoti CNC for a Q2 FY24-25. Thank you for the level of trust and confidence you have placed in us in our journey so far. We truly understand the responsibility that comes with your investment, and we promise to deliver the best of us. We shall start with company presentation and have the question answer session then later. In terms of a consolidated financial performance of a Q2, in terms of revenue from the operations from Q2 FY24, it was 302 crores as went up to a 430.7 crores, almost a 43% of a growth in revenue we are able to clock over here. In terms of a EBITDA and the margin, let's say on FY24, it was 18% and is now today went up to a 25%. In terms of EBITDA numbers, it was 54 crores, now reached to 106.6 crores in quarter two. In terms of operationals, PAT, the quarter two FY24, it was 16.8 crores, and it is grown up to close to 352% and is up to a 75.9 crores, close to 76 crores. And this revenue from the operations in the business mix, if you look at that, out of this 431 crores, aerospace has contributed close to 38%. Auto and auto component, our vertical has contributed to be 29%. General engineering has contributed 16%. Dies and mold has contributed to be a 2%. EMS business has contributed 11%, and others are almost a 4% there. And average price realization per machines, we are able to clock to a 41.37 lakhs, and the number of machines what we have sold in this quarter is close to 1,041 machines to be here. If I make it that summarize for the H1 numbers, so H1 numbers from FY24 to 25 is grown up by 55%, and the total H1 numbers has reached to a 793 crores almost over here. In terms of EBITDA, on H1 EBITDA last year was 14.6%, and this year is reached to a 25%. Is close to 170% growth has been clocked, and a 200 crores of a H1 EBITDA has been touched over here. In terms of a PAT, the last year H1 is close to a 3.4 crores. It has reached to a 127 crores almost to be like that. Each one performance in terms of our verticals, the aerospace vertical has contributed to be close to 43%. Auto and auto component has contributed to be 28%. General engineering is 17%. Dies and mold is a 1%, and EMS is a 6% there. And in terms of a revenue, is divided into two areas. Like India, we have a close to 55%, and we have exports is close to a 45% there. In terms of a order intake in a Q2 FY25, the orders we have seen very nice. The order book we have received in this quarter, and in terms of numbers, it is 1,283 crores is the order intake in this quarter. Out of that, even aerospace we have received close to 22%. Auto and auto component is close to 15%. General engineering we have received close to 17%. Die and mold is close to 1%. And significant movement we have seen in terms of the EMS, and it is reached to almost 41% over here, and others are 4% like that. So in our closing order book today, let's say opening orders was close to 3,400, some 3 crores was there. New orders has been came to 1,283, and the dispatch, if we remove the dispatch now today, the visibility of the very good future ahead and the growth forward for us is to be look like to be 4,289 crores orders are here there. In terms of a order book, total order book today, out of this 4,000, close to 4,300 crores, the aerospace is contributing now is to be a 43%. Auto and auto component is 15%. General engineering is 16%. Die and mold is a 4%. EMS is reached to 17%, and others are close to a 5% like that. Now we move forward to be, let's say, to talk a little bit more about the Jyoti. So Jyoti is basically a first generation business, and we are into metal cutting industries. We make the CNC machine for manufacturing the metal cutting. We are fully vertically integrated company, and we have our own foundry. We do the machine shop. We do all the component critical manufacturing in-house over here. We have a sheet metal shop, paint shop integrated to be there. We have our own sub-assembly, assembly, and fully controlled temperature assembly, sub-assemblies are there to produce the most precision world-class manufacturing facilities has been like here. In terms of our key strength is in R&D capabilities are there. All this our design and development, we are able to do it this in our Leonardo da Vinci R&D centers. There we have a more than 140 engineers are working to designing and developing every day a new product over here. In the last 2 decades, we have designed and developed more than 200 plus product variants out of 44 product verticals. We have developed very specific product baskets of today's need of the hours in industries called as Industries 4.0. Our product is serving them is called the 7th Sense. Is a fully integrated design and developed over here. We have a very many AI-based tools we have developed. We call it as a Preci Protect, and this take care of the complete machine through the real-time accident-proof machines to be there. And we have a many solution provided, completely application-oriented team is a part of that. So it is always supporting to our customer. In terms of our manufacturing capacity, let's say the last year we were having a 4,400 machines, and now with this our new bottleneck and everything has been removed. We have reached to the September end is close to 6,000 machines, and this is fully integrated into one plan over here. And we have a one facilities there into France there. Similarly, we can do in a same plant this kind of a multiple by 3 more fold. We can do that much of a space are available into existing plant at Rajkot over here. Huron is basically our technology backbone. Huron is since the company is established in 1857, is located into Central Europe. part place called as Strasbourg. It's in border of France and Germany, and very near to the most world machine tool builder, as well as the most automobile and general engineering and the highest precision manufacturing area in a central part of Europe there. Because of that, we have a technology access. We learn a lot of things from that, so to make the sophisticated 5-axis machine. And with that, our product baskets and everything on a 5-axis machines and all are very large there. Mainly because of that, we are able to cater many aerospace companies to be there basically. And because of the Huron, it's a very esteemed brand, and that brand value adding us a more and more customers base are there to us for the worldwide there. We have in terms of a sales and distribution network, we have close to 29 sales and service center across the India. We have 2 distributor and dealers are there in India, and rest of the areas are Jyoti is reaching to the customers there. We have a global customer base are there. We have more than 60 countries. Our until today's installation has crossed more than 130,000 plus machines, mainly in Europe and Asia, and even we have a good installation into China, Canada, USA, and Mexico to be there. In terms of our end user industry segments, I would like to highlight you something more like that, because the metal cutting is required to the every segment of the part in manufacturing that. So we are covering aerospace, die and mold, automobile, electronics, railway, agriculture, infrastructure, oil and gas, healthcare, pumps and valves, power, bearings, and etc. like that. We have divided, let's say, a total our presence into entire value chain. We call it the entry-level product. There, we have a complete product baskets are there. Total, we have a 200 plus product variants are there. We have a mid-range machines and we have a high-level machines. We have divided these categories based on the value of the machine. Let's say up to the 50 lakhs machines, we call it as entry-level product. In a mid-level machines, we call it up to 50 lakhs, and more than 50 lakhs, more than 50 lakhs to 2 crores is up to mid-range machines, and above 2 crores and all, it's called as a high-end machines like that. And Jyoti is in this entire product basket. In terms of a client in aerospace, we have HAL, the Tata Advanced Systems, Airbus, the Thai, the GE, the Avic, the Sikorsky, the Boeing, Safran, Rolls-Royce, Bharat Forge. And in terms of automobile, you have all the names we have. It is Tata, Mahindra, BMW, Volvo, Mercedes, Audi, Volkswagen, Ashok Leyland, Fiat. These are our, and there tier 2, tier 3, all the suppliers are there. In terms of other clients, let's say Arsenal Mittal, Azad, Harsha, the Bosch, many. We have a more than 12,000 plus customer base are here. Recently, in the last quarter, we recognized by 3 different awards. In terms of one is iconic brand of India by the our Times Group has been ET Economic Times has given this award, and another 2 was into a best product and a display award into different exhibition in the entire our country to be there. Road ahead over here. See, the India is, in terms of manufacturing, is growing on a great speed over here. And our assumptions are like that in the next 5 to 7 years, in Indian manufacturing is going to grow. Today is around 14 to 15%, and India is our total, our government and everybody's are looking to more than 20 to in between 25%. And there, the machine tools total growth are been anticipated more than 20% of a CAGR on the next 5 to 7 years here. India is, let's say, is consuming close to $3 billion worth of CNC machine tools in India today. Out of that, close to still 60% is to be imported, and there our going forward is our opportunities are there. We have, let's say, our vision and our mission is like that, propelling technology and prospering life. And with a strong management team, world-class infrastructure, wide product basket, strong R&D capabilities, large installation base, global footprint, and the legacy and technology from Huron. We are looking to be a very robust growth in coming days, and we have divided into this, let's say, four different categories. Today, category number one we call as automobile and general engineering. Second is called as aerospace. These two areas we are largely been established now. And the third area we are developing, in terms of our order book, it has been receiving significantly over here. In coming days, this is going to be third vertical. It's called as the EMS. In a fourth vertical, it is going to be our future, and it is a nice area that all our R&D team is working. In the next 2 to 3 years, we will see the good revenues. It is in a semiconductor equipment to be there. So these are our four going forward is an four vertical for our business segment over here. Right now we are growth engine is we are looking to be aerospace, EMS, and now electric vehicles are there, and in future we are looking to be the semiconductor industries to be here basically. In terms of strategies for the next leap, what we are looking, number one is to be a people development. Number two is to be a product development. Three is a market expansion, and fourth is a manufacturing capacity expansion over here. In a people development, that's the key, the biggest challenge what we are going to see it over here, because the business is the way our order books are there and still the big pipelines are there. The key is that we need to ramp up in our execution capabilities, and this all the capabilities are directly related to the people. So we are working towards to develop our own excellence, center of excellence. There we are able to develop this kind of a people very quickly over here there. So that's our one of the first strategy to be there. Product baskets is always the new product, because every day the customers are coming with the new challenges and all. So our R&D teams are making many a product on like that. And this year we have developed 3 more products. We call it as a GU5. It's called as a Techion 4FT and TS120. These are the 3 category of the product. GU5 is basically a aerospace machines. A Techion is a new Techion is basically the product for the EMS and healthcare industries. And TS200, this is the third product what we have developed. It's for the automation and for the more and more to a large production capabilities are there. It's a twin spindle machines are there basically. Market expansion, we are looking to be entering. Now today we are very good in terms of a presence in India, in Europe. We are now looking to the US there. Very soon we will have some tech centers, and our sales offices are going to be within 1 year. This is our target to be there in a market expansion into the USA there. In other areas like Thailand, Vietnam, and Indonesia, there also we are working with some of our representative over there, and we are looking to be a more business from that area also to be there. In terms of a manufacturing capacity, it's going to be a big requirement that the way we have today's order book as well as we have a pipeline is available with us. And just now we have completed our bottleneck and all. So our phase 1, we have reached close to a 6,000 machine as an per annum capacity. And this we are extending based on this our pipeline as well as our order books like that. Additional 10,000 machine capabilities we are doing over here. And on a same plant and on a same geography over here, and that additional facilities, we are expecting to finish in this 2 financial year, this year and to next over here. Yeah, that's it from my side. I think we will go forward on a question answer session now from here.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life Insurance. Please go ahead.
Yeah. Hi, sir. Good evening. Thanks for your time. I had a couple of questions. One on the overall industry itself. While you said it's about a $3 billion overall machine consumption, you said about 40% is domestic. Within this, obviously auto is a fairly large proportion, and given the slowdown that we're seeing in the auto industry, how would you see growth rates overall? Or do you believe there are new segments like for us, EMS, of course, is a fairly large and upcoming segment. So if you could just help us, how do you see the overall industry maybe grow in the next 1 to 3 years? Within that, how do you see, or which segments are the largest growth drivers, and therefore, which ones help us in that case?
Yeah, thank you, Ankur. Basically, in terms of automobile industries, yes, is the biggest growth driver for any metal cutting industries, and for us also in our segment over here also. But right now in auto area, there is a lot of transformations are happening there, and people are moving from let's say the more and more on the EV side, and there are a lot of new components have been designed and developed over here. It's a completely a new arena has been opened, and more hybrid side people are moving there, and the more components are like that. So they require basically for our assumption like that, we are looking to be more consumption required in the next 3 to 5 years in auto area to be there. And based on this, all the government this and all, people are looking to be more and more on the export side. All the component manufacturing is these people are exporting more and more. And then right now, in a China plus one, let's say many of companies are moving to buying the parts in auto and auto industries also to be here there. So in terms of the auto numbers is stagnant in terms of the consumption, but our in our inquiry level and our order book in our component manufacturers are still investing, and their confidence is so high. So we are looking close to a good numbers are going to come. A growth rate we are looking to be a 20 to 25% on an auto and auto component machines also to be there in the next 3 to 5 years there. Other segment, what is in India we are looking is to be general engineering. Okay, so general engineering, because of these exports and all are increasing, and a lot of manufacturing other areas like that here. So there we are seeing a good numbers are coming there. Okay. Of course, the third area is electronic is completely a new area for all of us here, and that is to be our growth driver to be there. So in terms of a Jyoti, our strategies are like that, where we are here, let's say we are looking to be a 15 to 20% in our auto and general engineering growth to be there. And the rest other growth we are anticipating to the two areas. One is the aerospace and second is the EMS there.
I understand. Okay. And so since you spoke about EMS, it seems we got a very large order in Q2, right? Almost, if I heard you right, about 500 odd crores order in Q2.
Yeah.
If you could just talk about this order, is it the same customer, delivery timeline? What is the current order book? How much of sales this year, next year? Just some more details, please.
So basically, it's a similar customer base are here. They have we have now many. I told you in the past also.
Yes.
Now we have 3 to more projects are there, and every project has given us this contribution. And in even the let's say we are looking to be large number in terms of in an EMS. It still is to come, and that is going to come on the next year still. Okay. This is just the beginning over there.
And how much would be the current order book for this customer, sir? Is it possible to share? And what kind of sales are we looking at?
Yeah, already, let's say, I have given the numbers over here. In terms of it's close to 700 crores now.
Okay. 700. Yeah. And this would be over how much time? About 2 years? 3 years? How much would be the execution time?
This we have to deliver in a 1 year time.
In 1 year or so. Okay. And just one more thing, sir. On our overall market share, just if you could help us, on the CNC machine side, both on turning and milling, where would be in terms of market share overall?
So overall market side in terms of, let's say there are two areas are like that. One is called as the number of machines, okay, and value-wise there, okay.
Mm-hmm.
So we are close to in terms of a domestic player, if I look at that. So market share is close to 10 to 12%. And in terms of a total, let's say import and everything together, let's say our percentage is only 4% in there.
Okay. And also on competition, sir, if you could just generally talk, I mean, is that fairly stable? Are we seeing any new entrants here, or is it still that same consolidated share where the top 5-6 players are controlling most of the industry? If you just talk about competition for the top 2-3 players,
all are the same. All are the same people. All are the same manufacturer. Actually, in these industries, I'm the last one has came over here as a new company kind of things are here.
Right. So the reason I ask is because when we last spoke to you, spoke about this whole import substitution, happening especially on the larger machine. Sorry. So anything there which you would want to highlight? I understand on the EMS side, of course, that substitution is happening.
Yeah, definitely these EMS numbers and these aerospace numbers, what you are seeing, it's completely is an import substitute there.
Okay, sir.
Also component in an entry level product. The Indian machine tools, the market share is close to 80 to 90%, and rest are importing. So our in a Jyoti, whatever the growth we are seeing is basically in EMS also is completely imported areas to be there.
I get it. Okay, sir. Great. I'll get back in queue. Thank you. All the best.
Yeah. Thank you, Ankuji. Thank you.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities Private Limited. Please go ahead.
Hi, sir. Thank you very much for the opportunity. Hello. Hi, sir.
Yeah.
So my first question is on aerospace and defense. We have received orders to the tune of close to 380 crores in the first half of FY25. I remember you had guided for an order intake of close to 1,000 to 1,500 crores for the full FY25. So do you believe we are on track to receive that?
Absolutely.
Sure. So these 1,000 crore orders, these are mainly Huron driven, mainly export driven, or does this include the domestic orders also that you might get from ordnance factory boards, the private players who are doing capex in the country?
Both are there. Okay. But 80% is going to be from the Huron driven and mainly our exports there in Europe area. And rest we are looking to be in Indian defense over here. And many customers in India have started procurement over here there.
Perfect, sure. And just a follow-up to that, I believe we were doing some debottlenecking, some capacity expansion at the Huron level as well. So are those activities over and now we are fully geared up to deliver those machines?
Huron, this new facility is going to be ready in the end of this year, basically, still. It still is going on there.
Okay, so by the
end of the year, the Huron facility is fully going to be ready.
Sure. Then what kind of revenues at the peak fixed asset turnover that facility can do when we would have completed this expansion project over there? So what are the peak revenues basically we can expect from Huron?
Yeah, after this expansion, in a Huron we can see up to 80 million euro to be there.
Understood, perfect. So just my second question on this 400 crore capex that you have announced, which you will do at Rajkot, close to 10,000 machines. So which industry these machines will be aimed at? What kind of realizations we can do? What would be our peak revenues that we can achieve from here? These capacities will also come with the inherent backward integration that we already have at Rajkot. So if you can give some more color on this capacity expansion, that will be helpful.
Yeah. So basically, we are expanding this 10,000 facility on a very entry-level product over here. And let's say this EMS product is also is an entry-level product. Of course, this is a fungible kind of a thing. I can do a turning, milling combination over there. But largely, what we are seeing, and we have a pipeline over here in EMS and with our customers and with the guideline what we have it. So we have dedicated of this almost 70 to 80% of this facility is for the range of the machine is close to 30 to 35 lakhs. And this is completely based at Rajkot. So even expanding facility in terms of a foundry capacity, then machining and assembly and sub-assembly in our sheet metal facility to be there.
So you will commission this gradually, I mean phase-wise, or this will entirely come in one shot, let's say 1.5 to 2 years down the line? How it will be?
So basically, it will be ready in terms of let's say in a first phase, it will be finished with the first bay will be finished, and we can have a capacity to add in is close to 5,000, and the next will be like that. So within 2 years, it will be finished completely on a 10,000 machine. It is not going to be a halfway like that, but utilization will start in between over there.
Understood, sir. Thank you very much.
We have the way we have order books and all, so we need to ramp up our execution on a next year to be there.
Understood, sir. That is very well appreciated. Thank you very much, sir, for answering all my questions, and all the very best. I'll get back in the queue.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities Limited. Please go ahead.
Hello, sir. Thank you for taking my questions. I have a couple of questions on the guidances that we have mentioned in the previous call. So firstly, on the order inflow, we mentioned that we would be getting orders of around 2,500 to 3,000 crores. Now, given both the quarters, we are already close to 1,600 crores, which is on the which is sort of higher than the upper side of the guidance. Would you like to revise that guidance for the order inflow of the quarter, for the year? Sorry.
No, I don't want to revise that. I want to be stay there what I anticipated, and we are going to be delivered that.
So would that indicate then that we would probably not be able to do more than about 12 to 14 more in order inflow, 12 to 1,400 more in the remaining year? Or is it that we are just being conservative about the order inflow?
What a guideline we have given, we will maintain those things. We'll be there.
All right. And also on the revenues, the previous quarter you had mentioned that you would like to deliver similar level of growth. Now, this quarter has seen, a 55% increase in a 45% increase in the top line, but it is nowhere close to the 75% that we saw the previous quarter. So again, for the full year, what numbers are we projecting in terms of revenues and PAT?
Oh, I cannot give you that. Let's say today the forecasted number to you there. Okay. But you can see that assumption like that quarter to quarter. You have to look at that, Jyoti, to be quarter to quarter of the last year there. Okay. And you will see the growth on every quarter to be there.
All right. So can we then... again, I know you mentioned that you cannot really say anything, but can we assume something like a 2,000 crore or 2,400 crore type of number for the full year?
If I say yes, then you can say you are guided like that. Okay.
Right. All right. Lastly, I just had questions on the EMS. So these EMS machines, as you mentioned, they are on the smaller side. So does that mean that what is the margin profile like for these machines when obviously now the order book is increasing for this segment? How will we see the margins play out when these EMS orders are executed? Will the margins increase or decrease?
So we have a balance on that, on a product mix there. Okay. So we have in a counter to that, let's say even in a past call I have given you that I have a 3 category of the product line. One is entry-level product, mid-range and high machines. So in an entry-level product, I have let's say our gross margin is coming to be close to 40% there, okay, and mid is 45, and large machines is close to 55% there. So with this mix, whatever the margin we are maintaining today, I think we will maintain the same profile on coming days over here.
All right. Thank you so much.
Thank you.
Thank you.
The next question is from the line of Sanidhya from Unicorn Asset Management. Please go ahead.
Hi, sir. So first question would be on this capacity extension that we are doing. So we are saying 400 crores capacity extension in 2 years, and we are also saying that we are going to raise internally and externally.
Yeah.
So I think our cash flows would be sufficient enough for this year. It will be sufficient enough to fund at least more than 50% of what we are planning. And while 2 years, like, not able to understand, can you explain it more?
See, the 2 years is like that. Let's say it's 2 financial year basically. Okay. So the one financial year is this, and next financial year of coming years. Okay. Based on that, this capacity will be ready there. And internal and external both are being given, because almost we are going to do with our internal accruals only. If any timing mismatch are there, and if we require something to borrow that, so we have put up over there into that. But most of these things are going to be internal accruals only. It is sufficient internal accruals to match this our growth to be there.
That would be debt, right? No equity issue.
Definitely. We will have a short time line we may use. Most probably it is not been required. Okay. But while we are planning, we should definitely tell to truth. So we have less internal or external, but it is not raising the capital to be there.
Yes, surely, because my numbers are stating you will have sufficient headroom for that. And can we assume that FY26, the entire capex would be completed before the year ends? And
Absolutely.
And sir, why is the delay in terms of the debottlenecking that we were doing? So if I see currently you are stating for 85% of capacity utilization for this quarter. And if I do the number, I am sure we didn't use the additional 1600 machine capacity that we are doing for the debottlenecking. So what took us so long to do that?
No, it's a time. It's a construction, the installation, the equipment, and the way the new capacity we are doing is the fully automations are like that. So the installation capacity time is required basically. The execution time is required. I'm ready to do it. If anyone's are able to establish my plant for 15 days, I'll be most happy person to.
Okay. So should I assume that now that we are done, 85% utilization of 6,000 machines can we do for the next 2 quarters?
You can assume like that. That's why we are adding the facility also there now.
Yes, definitely. And sir, last time on the TV interviews said that we would be doing more than 2,000 crore of revenue. But looking at the current timeline, it looks quite difficult. Secondly, on what could be the maximum push that we can do on the average realization per machine?
So the today average realization what we see is the 41 lakhs. And in terms of our order book today is close to 50 lakhs. So in the next couple of quarters, you will see the rising the average there.
And even after the EMS book, because you were stating that EMS would be 35,000 per machine.
We have a combination of that. Now, execution is going to be, we have a large order books are there and the machines are in pipe. So aerospace machines are going to be, it's a combination of a model mix there basically.
And what kind of capacity utilization can we expect for next year, since the capacity would start coming in? So not the entire would come, of course, in the initial first half of FY26, say. So how much do you think would come in, and what utilization do you think?
So it's basically when the facilities are been ready, based on that we have to let's say calculate the numbers there. Next year.
No, I don't want a number, sir, definitely. Just lastly, so if I see the order book currently stands at 42.
Yeah, you are right on a track that what you are asking there. Okay. Yeah. Only thing is that let's say if my capacity let's say 5,000 machine capacity ready by December, okay?
Yes.
Or like that. Based on that numbers, I need to be calculated and given. But we are looking to be as fast as possible to capacity to be enhanced over here there.
Definitely, we will have more calls and we can understand what's going on. Just lastly, on the order book side, so 4,200 is the current order book, and we are expecting that to complete in like 12 to 18 months. So may I say that 4,200 is what we can execute in next financial year completely, and some additional as well?
Based on the capacity, let's say, the ones that my capacity will be installed will go faster there.
Yeah, because my numbers are saying that we can do if we get the additional capacity. So what is your understanding on that?
Yeah, but let's say if anything, I'll give you the numbers. It will going to be a forecasted numbers. I'm going to tell you. You are on a track. You are right on that. Okay.
Thank you. Thank you so much, and all the very best. All the very best.
Yeah, thank you.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity. And congrats, Jadeja ji, for executing the what you have been telling. And this capacity addition demonstrates your capabilities.
For the number.
Yeah. Sir, one question on the part of like cash flow. If I see you had a 90 odd crore negative on the other financial assets, which I believe is more of an unbilled revenue. Because last year it was like say March 2024, it was 180 and it has almost increased by 100 odd crore. So I believe it's more of an unbilled revenue which we have for the EMS.
Correct. Absolutely right.
Yeah. So when are we going to realize that? I know that machines would be in the testing phase and all that, and you have took the pain over the last many years, and you have established that you have got the big supplier there, big buyer there. So how the thing would be there on that part?
So basically, you will see these numbers are going to be decreasing in the next couple of quarters now.
Okay.
Because the way the large machine, you know that every machines are very big machines and all, and number of machines are in the pipe there. So once it's been dispatched, and we are looking to be a large dispatches are in quarter 3 and quarter 4. So you end of the quarter 4, you will see this number will reduce drastically to be there.
Great, sir. And sir, secondly, on the part of your expansion, if I understand correctly, you will get this capacity done by December 2025. Is it correct? The entire 10,000 incremental capacity?
Plans are like that.
Okay. Okay. And sir, like if I see your EBITDA per machine, like say it has come down to 10 lakh rupees now for this quarter. So going forward, what trajectory can we see on the EBITDA per machine? Because EBITDA margin won't give that particular picture because your like say the share of the EMS and all those machines mid-level or that would continue to vary. But on a EBITDA per machine, so where do we see that settling in?
So I told you that is a 25% is a average margin, okay, and that we are maintaining and we are going to maintain forward also. And the average is 40 lakhs plus. So you are right there, and we will maintain on that track.
Okay, so around like 10 lakh rupees, which is the current run rate.
Yeah.
Yeah, great, sir. Thanks a lot, sir. Thanks a lot. And best of luck, sir.
Thank you. The next follow-up question is from the line of Sanidhya from Unicorn Asset Management. Please go ahead.
Thank you for the opportunity again. Sir, two questions. First, on the Huron side. So you were saying that for last 2 quarters, we have been saying that the capacity will be completed, the extended capacity will be completed till September. And now you're guiding for the year end. So what kind of delays are we facing and anything specific that we are stating there?
In Europe?
Yeah, in Huron.
Yeah. So basically the capacity, the assemblies and everything is we were initially will look at to be December, and still we are crossing our fingers, but that is some delays are going on there. Okay. And in some installation of some equipment and everything is being delayed. But most probably this facility will be ready somewhere in end of December or middle of January to be there.
Sure. Nothing worth highlighting, like did we face any particular challenges?
Nothing is anything, not anything as a special kind of a thing.
Okay. And if I was looking at the annual report, so we have some unbilled revenues, with the other person also talking just before me. So you're saying that would slowly try to come in the statements, right?
Correct.
And just above that, there is interest and commission receivable from subsidiaries. And if I look at that number, so we have some investments in subsidiaries like Jyoti SS. We have some 60 crore investments, and other than that, also we are having some investments in other subsidiaries. What kind of investments are these?
So basically, this is what we are expanding this facility. Okay. So this assembly building is under construction there. Now, what we are discussing and going to be finished in January to be there.
Okay. So I didn't understand what is the interest and commission receivable from these.
No. You say the investment there, correct?
Yeah. So if I go on the in the page 149, 148 on the annual report, there is a section for other financial assets.
See, basically until today, Jyoti has fully supported from here, okay, in the last 15 years. And whatever our investment has been made over there, as per our Indian guideline, we need to charge the interest to be there, okay. And whatever we non-fund limits and everything we guarantee, and so guarantee commission also to be taken from them basically, okay. And Huron was not making the profit over there, so they are not able to pay us in the past many years back. So that is the accumulated incomes are lying there basically.
Sure. Sir, what is Jyoti SAS France, if you can highlight?
So Jyoti SAS is a 100% subsidiary of our SPV to acquire this Huron Grafenstaden there. Okay. So Jyoti SAS is a 100% subsidiary of a Jyoti, and he is holding the 100% Huron Grafenstaden to be there.
Okay. So the investment in the Jyoti SAS book would be the Huron investment. Got it.
It's a Huron investment.
Important. Thank you. Great. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Swanand Samant from Clay Securities. Please go ahead.
Hey, hi sir. So my question was on the competitive landscape, right? So most of your competitors are on the unlisted. So you have been pretty aggressive on capacity addition. So just want to get a sense on how the competition is also on the capacity addition part. And second on, we have been again pretty good on the order inflow side, right? So has the competitive intensity increased in general with the CNC machine if the industry has been growing at 20% plus, right? So how has the competitive intensity in general has been increased in terms of order tenders or client addition? Any sense on that would be helpful. Thanks.
So basically, we are a main 3 to 4 competitors are here. There is no add-on competitor has been add-on there. And based on the India is increasing the capacity, let's say the India is consuming more and more machines. And there is a great opportunity still because once suddenly the spikes are coming, always imports are increasing there. So other than me also might be all other my manufacturers also, competitor also might be in a near term, they will also invest and expand the capacity to be there because there is a great opportunity ahead to all of us over here.
Okay, got it. And in terms of intensity, has it increased in terms of if they have added capacity? do you find it difficult to get orders from your clients? How is the competitive intensity as per?
No, it's not that much has been increased there. Still, there is we have a great rooms to compete to import machines there. So there is a great opportunity to us to compete to let's say the people are enjoying the business today, we have to compete to them basically.
Okay, got it. Thanks.
Thank you. The next question is from the line of Jignesh Vaida from Jiva Capital Limited. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, wanted to understand on the CNC front, since you mentioned you have 140 people in R&D division. So I presume the machine control unit world over is only used of 3 main companies like Fanuc and all. So, sir, are we in the process of developing that machine control unit from our R&D division, and how soon can we reach there?
Thank you for a nice question there. That is a dream for us for the future. So already our teams are working and we are expanding this team rapidly over here, and we are expecting to develop something in the next 2 to 3 year pipeline over here there. Okay. In the next future, we are going to be having a more investment plan is towards the CNC controllers, drives and motors to be there.
Oh, right. That would be, I think, really help in increasing our margins greatly.
Yeah. So basically, we are looking to be our core business today is a mechanical part today. Okay. And Jyoti's vision is to be there. Our core should be mechatronics to be there. Okay. So mechanical and electronics combinations and many more opportunities are opening for us over here. So it's definitely these parts are in our radar there, and we are looking to be good investments on coming days to be there.
Right. Sir, on the semiconductor front, which is our future area, so how are we, how Jyoti is kind of to have this opportunity scale up going forward?
Yeah. So right now we already started at many products on our drawing board, and we are putting up a more R&D team on coming days over here. So that is going to be a great opportunity in coming days over here. So right now 2 to 3 products we are designing. Okay. Once prototypes and everything will be done, we are working with very close to our 2-3 manufacturers come over here. We are directly in touch with them, and we wanted them to move faster. But this is also a new business for us, so the design and developing time is longer time over here. So we are anticipating the business we can able to see somewhere in 2026 over here.
Okay, so some revenues would start flowing in.
Yeah.
Right.
But it's a large opportunities are opening up over here.
Right, understood. Sir, with AI coming up, and our machines integrating with the entire software like SAP with your clients, so sir, kind of scheduling or the kind of parts production, is it already done or it is being scaled up?
No. This right now what I told you in my presentation, that's our product called as a 7 Sense. So there you can do your factory automation and completely you can tracking, monitoring and scheduling all the plant similarly to SAP there. Okay.
Oh,
even in a quite better in terms of a user friendliness and all, because it's completely on a soft floor requirement to schedule and planning. Okay. So that is the integrated part of it is our product to be there.
So I think this 7th Sense kind of products would be more of used in the EMS industry.
No, every manufacturer there.
Okay. Right. Understood. Thank you, sir.
Thank you. The next follow-up question is from the line of Sanidhya from Unicorn Asset Management. Please go ahead.
Thanks again. So, if we look in the Huron facility, so this quarter, is it safe to assume we did a revenue of 55 crore in INR terms, or if you can give in euro terms, that will be fine.
Yeah. In the second quarter, it's close to 70 crores.
Okay, 70 crore. Yeah. And what is the utilization this quarter for Huron?
So the Huron is today, let's say our plant capacity is close to 40 to 45 million euro there. And this is almost more than 80% of that.
Okay, and with additional capacity by year end, we would like almost 1.5x the size there, right?
Correct. Almost the capacity is going to be a double, but we are expecting to be 1.5 in the next year there.
Okay. And secondly, on the EMS, so we received 41% orders from the EMS this quarter. So is it only from the one player, or is it divided between two players? So there I want to answer. And just from the, without naming any clients, just from the diversification perspective.
So there is basically 2-3 projects are there, okay, and then all projects are a different client there.
Okay. And on the side of, we are hearing that display manufacturing is also starting in India. One of the players starting that. So are we supplying to them as well for display manufacturing their machines?
Yeah.
And for ITPLI too as well?
What is your question?
For the IT hardware, that is laptops, notebooks, all that.
So right now, let's say we can say that today is in the mobile and to be the watch and even some computers. These are our end users are making it.
Okay, so not into notebooks as of now. Any plans to go there?
So already we are working with them, and trials are going on. We are looking to be in future to be a notebook also to be there.
Okay, so hopefully by next year we shall get the approval, right?
Yeah, I told you that EMS is going to be our target area, and we are working with the many of them, and one by one it will be covered.
And so lastly, on the US side, so are we planning any big clients from that side? Because the world looks like moving to manufacture in US. So if that story is to develop, are we in the right place to move?
Basically, because of a Huron, and now we have a capacity increasing in Huron, and we have now a capacity and more model has been producing in here in India, and we are very competitive over here, world, let's say on a scale. And US, in terms of aerospace, is the largest consumer there. Okay, so increasing our market portfolio and reach out to more customers to be there, basically there.
Any plans for any facility in US or warehouse or anything?
Yeah, so we are going to create our technical center and a warehouse there.
In US?
Yeah, in US.
Any timelines?
So within 1 year there right now.
Okay, and we are getting any inquiries for the same, therefore we are venturing into that?
Yeah, we are working with the many our large customers to be there, our existing clients, and they are asking us to come over there, so we are looking to support them nearby there.
Do we see any impact on inventory and anything at all if we venture into that? Because maybe they want in time execution, so we might need to keep some inventory for that.
It's not like that. It's not like that. But while we are making the machines to be there on the tech centers, okay, as in demo centers there. Yes. And the entry-level product, what we are making it over here, those kind of a product only we need to be stocks to sell faster to be there. Because in US, people are looking to be delivery very fast over there.
Yes, exactly. That's my point. Because for any player that we ask, they are always stating that for US player, we need to keep some inventory so that we can execute.
Absolutely.
Okay, sir. Thank you so much and all the very best. Everything looks to be good.
Thank you. Thank you very much.
Thank you. The next follow-up question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah, sir. So, I believe 10,000 capacity expansion is going to be there in a year's time. So, but over next 3-5 years, so what particular capacity levels we are targeting? Like suppose this expansion we would be 16,000. So going forward, what is our end target? Like in next 5 years, what particular capacity levels we are going to target on or embark on?
Let's see. See, the capacity we are installing is basically to utilize as much as possible faster to be there. Okay. And the ones the execution will be increased better and better, we would like to utilize more there. But in terms of this is our phase 2. Okay. In the next 5 years, this is not going to be sufficient to be there. Okay. So definitely we need to expand further to be here there.
Because over the quarters, you have highlighted that the way the China has gone in the value chain with regards to the EMS side. So similar levels, like can we say that it can be 30 odd thousand capacity by the by FY28, 29. So just wanted to get a sense on that.
Yeah, basically you are on right. We are looking similar numbers to add on there on next future to be there.
Great, sir. And lastly, sir, can you provide the breakup between entry level, mid level for this particular quarter in terms of machines sold and average realizations, which you provide for every quarter?
I can let's say in terms of an entry level product.
Yes.
Okay. We have a 934 machines.
Okay.
And average of a 21 lakhs.
Okay.
Mid-level machine was close to 88 machines, and the high-end machine was close to 19 machines.
19 machines.
So
and
total close to 1,041.
Okay. And 2.21 lakh rupees was the entry level and mid and high level?
Mid-level, the average was 1 crore 1 lakh.
Okay.
Okay. And the high-level machine average is 5.8 crores.
Okay. Great, sir. Thanks a lot, sir. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Participant, you may press star and 1 to ask a question. As there are no further questions from the participant, I now hand the conference over to the management for closing comments.
Thank you very much to all of you. The way you put on trust on us, we'll do our best over there. Thank you very much.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.